Hey traders, welcome to the channel, the Trading Mindset Mentor. We are live trading in gold again. So I hope you remember the London session. We made a very good profits. Let's open up the trading journal over here. But before we start, do subscribe to the channel, the Trading Mindset Mentor. We are live trading in gold and Forex every day in London and New York session. So in today's London session, the market was highly consolidating as it was been in the consolidation for whole day, as you can see. But in the London session itself, we made a very good profits over here. We made four profits and one loss. So let's see the trading journal for today. This was the London session trading journal. So I have taken up a small trading account challenge with $500, and right now we are at 546. And the last 10% was increased in the London session itself, in which we took these 5 trades over here, and we made some good profits and one loss was there. So similarly, we will be following the same setup over here. We will be taking 5 trades. Okay, so those who are new to this channel, do remember guys, we take 5 trades every session. And in those 5 trades, you have to remember that every trade is 1% risk. So whatever your capital size is, it doesn't matter whether it's 500, 5,000. What matters is your risk per trade. So risk per trade should not exceed 1%. Okay, so this is what you have to remember in every case. So today's maximum downside momentum will be -5%, and the upside momentum can be highly effective depending upon the risk reward, because we know that we are smart money concept traders and we have high risk rewards as well. So this is what the major expectation is. It can go up to -5 till 25% positive itself. Okay, so this is the range of the profits and losses. So the people who are trading with us, do remember this, follow your proper risk management, and that's why we are here for. Okay, so let me do this. First of all, I need to clear the drawings. Let me see if I can clear the previous drawings in the market. Okay, so yeah, now we can work upon it. So I've cleared the price levels of the previous drawings. They were actually giving us a good unclarity regarding our setups. So now the price levels will be properly visible. So since 7 p.m. is going to be there, let's see if there is any news for today. Today, as you can see, guys, today all remember that as such, today there is no news. Tomorrow there will be FOMC, in which I have already analyzed the market and I have put up a whole Forex news weekly analysis video on our channel. So you can go through this video and look at the all the news that is going to be there in the whole week. So all the important news. Okay. So today we are expecting what, since let's mark the liquidity levels now. Since the 1 minute is about to be there. So this is the Asian low that I've already marked over here. And I think this was the Asian London high. So this is our London high mark, guys. I'm marking the major liquidity points so that we can understand where do we need to target, or where do we need to take stop losses from. Okay. So this is a London high. What happened in the London session, the price consolidated in the whole level, while the Asian session, as you can see, there was a huge plunge towards the downside. So now the New York session has started, guys. So let's see what is going to be there. As you can see, the New York session started with the good roll towards the downside. The 7 p.m. candle, it took out the London low and the Asian low, I believe. Both the Asian low and London low have been taken out by the 7 p.m. candle itself. So this is the opening candle, and that's why we never take trades in the opening sessions. Okay, so opening, always remember, you have to be very specific and you have to be very choosy, because look at this. What did happen in the opening candles? As soon as the 7 p.m. candle hit, there was a huge plunge towards the downside. While the market was consolidating for so many hours, the same size candle has been framed in just 1 minute. Okay, so this is a 1 minute chart. We are scalping in the market. So that's why we wait for the first opening R bell to understand where the market is trying to go, and accordingly we plan the trades. Okay, guys. So let's see. This was the last breakout that has happened over here, and this will be regarded as a change of character in the market. So this was the last breakout structure that happened exactly at 7 p.m. And previously to that, believe this is the major structure over here. So previous to that, this was the major structure. Okay. Why I'm marking this? This is highly important because the price has taken out the Asian low and we can expect some good volatility towards the upside. So let's see what we can plan over here. This is the new breaker structure. If the price goes above and take out this liquidity level, I have marked over here exactly at 4392, then we will be looking at a downside trade. So price took out the upside liquidity. Price gave us a good remember to the chalk. Why did it happen, guys? Because the price just took out the Asian low, which was being waited for the whole so many time. There were a lot of liquidity available in these levels, and that's why the opening candle gave us a good momentum towards the downside. Now, what you can see is that in a single candle itself, the price is trying to go towards the upside, which is targeting the London high and the Asian high. So let's see what type of trade will we get over here. So in the New York session, we made good profits. Oh, sorry, in the last London session, we made good profits. Today, the New York session started with panicking. So let's see if we can make some good profits over here as well. So let's start with planning our first trade towards the downside because the market manipulated upside. Let's plan a small trade downside. If the price gets a bearish order block, only then we are trading. Otherwise not. Since a single candle was around 100 pips, so my minimum stop loss was $10. Now the candle size has shortened. So let's see what will happen now. And the target will be over here. If the price gets a bearish order block, then we are looking for selling, otherwise not. Price didn't confirm the bearish order block. Now let's replan the entry. If the price gets a bearish order block only, then we're looking for selling, otherwise not. And the target will be on the downside. Let's wait and watch. So this will be our first trade for out of the 5 trades that we are going to take for today. For those who are joining new, welcome you all to the Trading Mindset Mentor channel. We're live trading in the gold itself with real money and along with the proper stop loss and targets so that you people can actually understand how to do professional trading. So price is plunging, actually moving towards the upside, pushing towards the upside only. There's a high probability that the price can take out the London high as well. But because right now the price manipulated on the upside and the downside both, we are looking for a selling opportunity in the market. So that's why our conjecture is for selling right now, not for buying. Since the candle sizes are higher than the usual, that's why I use this broker over here because it actually calculates its own position sizing itself. And if you want the same benefits, you can open up the broker account with the same link I have provided in the comment section. It gives me the zero spread. That's why I'm able to get my entries exactly at the levels where I want to. And secondly, it recalculates its own position sizing. Price is making new big candles, panic momentum. There was no news as such. We confirmed that there was no fundamental analysis news for today. However, if you will see that the prices are actually going towards the upside, pushing towards the upside without giving us any kind of entry. So this is known as the panic momentum that happens one of the time. So my analysis says that the price wants to target towards the London high, but because there is a lot of manipulation going on over here in the price today, so we'll be very conservative as to what we are looking for and how to take the entry. We don't want to rush anything so that we don't get caught up in the manipulation side. So let's look at the next trade. Since the candle sizes are becoming huge, we have to be very cautious as to our stop loss size and the target size. Let's plan the next trade. So we are waiting for a bearish order block to be formed if we want to have a selling opportunity. So price is about to take the London high as well. Let's see if it completes the circle. A small gap between the London high and this candle's high, which means a small manipulation is going to go through. Let's see how the price manipulates it. Because we have our controlled stop losses and controlled targets, that is why we are here still and we are able to continuously trade with the same capital over here again. Many of the traders try to trade with big quantities with no actually good strategy or following up their good strategy. In both the cases, it is going to be highly disruptive for both of for your trading psychology, guys. So high probability says if the price takes out the London high and then we sell, it will be a good trade. But because the price is trying to manipulate with the London high itself, so this price level is the London high for today, 4403, and it's still not be able to move towards the downside or upside. So there's a lot of you can say pending orders in the market which are not letting the London high to be broken by the buyers itself. So buyers are needing more fuel, so that's why I'm expecting the price might try to go towards the downside first, taking a retracement and then might go down. Let's see how the price behaves. The price has not shown any signs of bearish entry. It's starting to go downside. Let's see if it goes down or not. No. So once the price gets a bearish order block, only then we are looking for selling. If the price takes out the London high and then gives a selling, that will be a much more better opportunity, if you believe me. However, there is a manipulative zone over here. There is a high expectation that the price might not touch the London high, or it did, right? So finally, price took out the London high as well. And thank God if we don't get any wrong entry, Because if we have taken, looking at this buy leg, if we have taken any selling, then there would have been a probability of losing the money, but that didn't happen, and that's the best. So now once the London high has been taken out in the market, now we can expect some retracement towards the downside, and that's the retracement I'm trying to target for the downward money. So let's plan the next trade from here. I think that's 62 pips over here. So that will not allow me with small losses. Let's see how the price behaves. Does it really gives us entry or tries to move towards the upside? After taking out the session liquidity, high probability says that the price should take a deeper pullback towards the downside. This is our expectation. Price is trying to flow towards the downside. Let's see if we get the sell order or not. Price has just taken out the London high itself. And that's why we are trying to we are trying to catch the retracement towards the downside after taking out the session liquidity upside. The price might to try to turn towards the downside. And this is the major target. If you ask me what is the major target, it is directly towards the downside. Let's see if the price gets any bearish order block or not, or it tries to move towards the upside again. So now this is the near boss. If the price goes above this level, then we are looking for a continuation trade, not a reversal one. And this is a new breaker structure. Let's see if the price confirms the entry or not. 10 seconds left. It didn't confirm the entry. Let's see, the price started moving towards the downside. As I told you guys, after the price has taken out the London high over here, we are expecting the price to come downside. So this was the London high that the price took out recently, and we are expecting a good retracement towards the downside, for which we are targeting this major strengthening towards the downside. Entry is punched now because the price confirmed the bearish order block. So I've confirmed the limit entry and the target would be around over here. Let's see if we get this entry or not. Price has taken a good pullback, but I expected a deeper retracement. So if the price gives us a deeper retracement, something like this, and goes like this, then we will be not looking for selling. Okay, right now we are looking for selling itself. Why? Because the price has not taken a deeper pullback. So this was the last resistance from where the price moved towards the downside, price went up, and this is the law of polarity, where the price is trying to take support again. So many buyers are coming in now. Why? Because they think that the last support will become the resistance, or sorry, last resistance will become the support. Let's see if the price executes our entry or not. Price is moving up. Let's see if we get the entry or not. It's consolidating. There's a good expectation among the sellers or the buyers that the price will try to reverse. So in any kind of market situation, either the bias, so price has taken out this major liquidity. Okay, so if the price comes back at this level, so price was, we executed the limit order, but the price didn't punch. It starts moving towards the downside without giving us the entry, and that's kind of unfavorable. However, let's see how the market behaves. Sometimes this also happen. As I told you, why do we take the limit orders? because it gives us the authority over slippages. If the slippages will be there, then there will be a high probability it can go against us. That's why you put the market orders. Oh, sorry, you limit orders over here and not the market orders. So price is retracing towards the downside. However, it has not punched the limit order over here. So we are still waiting for the entry to come. So price created a new liquidity over here. Let's see if the price crosses this liquidity. Then we can again actually plan for selling. Hi, new people. Those who are joining, please hit subscribe icon to the Trading Mindset Mentor. We are live trading in the gold itself, and we are making good profits in the London session as well. So now we are trading with the thing. So we are about to take our first trade out of the 5 trades. So price is taken out this liquidity. So this is now considered as the new internal shock. What we can do is we can plan a second type of selling entry from this level. And we can target it over here. Let's plan. Price is actually pushing towards the upside again. So it gave us the original entry. As you can see, guys, what did happen over here? We got the original entry. Okay, so original entry that was punched over here. Now the target will be exactly over here because this is where the new structure belongs. So what we have done is modified the position. We have smaller the targets. Why? Because we need the price has created a good liquidity downside. So we can expect if the price tries to move towards the downside, it will try to go to this level. If not, then a small stop loss will might happen. So this is the new target. The low of this candle is 456. So I have submitted the target. The stop loss will remain over there. So $4 stop loss, $10.52 target. Okay, don't look at the stop loss or targets. It's basically dependent upon the risk reward. So the total risk reward that we are generating over here, it will be 2.41. So the capital might be different for you or me, but what is necessarily good is that you need to find the same type of situation that I am. 1% risk per trade. That's it. So we can plan one more selling. If the price doesn't go for this, we will be able to plan one more selling towards the downside. So let's plan the selling and we'll be targeting again to this level. If the market goes up, don't worry, it will have a small impact of the stop loss and it will try to take out the external liquidity which is provided upside. And accordingly, we will be trying to trade towards the continuation. The price gets a bearish order block again, then we are looking for one more sell. And target, I have already told you guys. If the price continues and jump towards the upside and take out our stop loss, and then major liquidity, then we will be looking for the buying itself, not selling. So I think the price is near to our previous stop loss. I think price has taken out the previous stop loss. Still running. $4 stop loss is there. Till the below the external liquidity, we can still plan for one more sell. Okay, price has taken out the previous stop loss, guys. It's a $4 stop loss. If the price takes out the external liquidity, then we will be looking for continuation. That means buying towards the upside. Till that time price doesn't take out this external liquidity, we will be selling. So first out of 5 trades was stop loss. First trade was stop loss. That's okay. Small stop loss of 1%. So let's see if the price takes out the external liquidity or not. Till the time the price is not taking out the external liquidity, we will be planning for selling. This will be a double top pattern and the target will be remaining over here. So it's just 1:3 risk reward. If the price takes out the external liquidity, then we are not looking for selling. Above this liquidity, we'll be looking for buying itself. It seems to be trapping. Yes, actually. People are getting smarter these days. You take your first trade. Yes, we have taken our first trade out of the 5 trades today. Let's see if the price hits another bearish order block, then we'll be looking for selling. Above this major liquidity, we're looking for buying only. Till the time the price is not manipulating the above side liquidity, we're looking for selling. So let's plan from here. So price manipulated from this exact level. It started going down again. And that's what I expected. If it goes beyond this level, then we are looking for buying and not selling. If the price has changed the bearish order block or not. Okay, I punched the second order. Let's see if we get this entry. This is a double top pattern that the price is trying to create. And that's why I'm taking a sell entry and I'm targeting the neckline. So let's see how, if we will get this entry or not. The first entry was not punched. It punched after the price went up towards the upside and take it to a stop loss. Let's see if we get the enter executed or the price goes to a target without giving us the entry. Price still hasn't executed our price levels. The order is still in the pending format. Price is still pushing down and not giving the entry. So today panic moves are happening, guys. Even I've given the full space for the entry to come. Price is exactly going where I actually analyzed that it should go. However, it didn't give us any execution on a limit order. If the price goes towards the target area and fills the target, then we will be looking for buying and not for selling. Price consolidated a lot in the London session. Look at this. And that too, we have made 10% with the limit orders itself. So New York, if you look, it's not going anywhere. Price at the direction, if you look, it's just consolidating. It's consolidating better or bigger than the London session. That's it. Without a remorse, the price went down without giving us any entry. Die the entry, die the target. Somebody saying Shakespeare. Quote, big artist. It is going down with us. Somebody commented. No, die is going down without die. So price is consolidating within a range, okay? It's not going anywhere. No doubt we are prepared with our tools. If the price goes up, it will give us the entry and we'll try to go with the target. If the price goes down to the target without giving us the entry, then we'll be looking for buying. Moving upside again. Let's see. Pushing up again. Let's see if this time we get the entry or not. Please be having a good risk management, guys. There's a high probability the price gives us entry and take out the stop losses from the upside as well. Okay, anything can happen. The price is highly consolidating. All we have to do the best is to understand how to manage your risk properly. It is moving in waves today. Yes, like a die ocean. So finally, after half an hour, price has executed a trade. Please be having a good risk management, guys. There's a high probability price can move up. There is liquidity above these levels as well, and the liquidity below these levels as well. Both can happen. Okay, so if the price goes up and takes out this major target, then we are looking for another buy trade. If the price goes down and takes out this liquidity, then we will be moving on to the next trade. Let's see how the trade plans. This was moving in waves. Price has already given our order. This is the second trade for today. Out of the 5 trades, first trade was stop loss. So let's fill up the journal as well. So first trade was exactly for the, I believe, yes, chalk E3P. And we had a -1 over here. The stop loss was $3.95. Let's look at the second trade. Second trade is 2ER of the chalk itself. I think the price is about to take a stop loss. We'll see the entry or exit. What is happening over here? As you can see, the stop loss is still intact. It plays the best stop loss. Let's see if it moves down or not. So where I actually put the entered into there, you can see that there was a good selling reaction. However, for getting the targets, we need to see that the sellers present over here in this supply zone should be able to overpower the buyers still over here. This is our conjecture. And the risk reward in this trade is 4.25, which is a very, very good risk reward. So price after testing the whole stop loss area up to 90% started moving down. Below this level, you can do the break even, and post that we expect the target should be taken out. Tell me in the chat box who have actually entered this trade as well with me. Price is flowing down, guys. Let's see if it gives us target or not. People are making profits. I have punch trade running. Someone is actually ounced, not punched. So die the entry, die the target. Now Shakespeare has given us the entry today. Always respect the big artist, bro, the brothers and sisters, because here we are doing our artistry. We are making some drawings and lines, and accordingly we are making money. So do remember this. Respect the artist in you. Okay, someone also is getting the Shakespeare. Some trading is an art, thou. I should say thank you, but I have forbidden myself for doing that. So price is still consolidating. It's still trying to move upside. Please manage your risk well, because it can also happen that the price, without taking the target, it will try to move towards the upside. Okay. So both the probabilities are clear because the price was consolidating and we took the trade in the consolidation market, expecting the market will manipulate towards the upside and will try to target towards the downside. So let's see if we get this possibility or not. This is the second trade of the 5 trades that we do every day in every session. And those who want to take 1:1, the price is already more than 1:1. They can take partial profits as well. I'm taking very small quantities, so I'm not taking any partial exit. My whole point of trading is to grab the liquidity. And I believe the best liquidity to grab over here is this and this level. So if the price goes down below these levels, then I'll be much more happier, like this whole smiley. Let's see, it's going to near to a target area. Remember, guys, this is a 4.25 RR trade. A high level consolidation is going on, guys. Both the soldiers on the buy side and the sell side are very active and they're not letting crossing their boundaries. So the lesson in there is you should always respect your boundaries. So let's see if we get the target or not. If the price goes below this level, I would suggest you to do break evens so that you don't lose any money. And if the price hits the target, then that will be a good way to celebrate. This will be a 4.25 RR trade. Price is already covered 1:3. People who want to get out, they can get out as well at 1:3. You don't have to just follow my trades blindly. You can use your own risk management and reward management as well. So best trades are also 1:3. If you're getting 1:3 in every trade, you can get out and you can enjoy this and celebrate, because since consolidation is going on, both side probabilities are there. The price making a smaller sell leg, a smaller buy leg, a smaller sell leg, again a smaller buy leg, and then it might try to go towards the upside or even downside. Okay, both the probabilities are obviously available. But I always trade with the high probability trades, and that's why my thought process told me that the price of high probability says that the price should consolidate from these levels and should go towards the downside. And that's why I took this trade. Okay. So let's see if the price gives us the good retracement till over here or not. Post this level, we'll be planning the next trade. So this is the second trade out of the 5 trades. First trade was stop loss. We have put the same in the journal itself. In the London session, we made around 10%, 10 R. If you look over here, how much R did we make? So 9.73 R we made in total in the London session. Okay, out of which my profit was $51. As you know that I'm trading with a very small capital of $500 in front of you. So let's see how the trade behaves. Those who want to get out, they can get out at 1:3 as well. And those who want to hold with like me, they can hold till over here, like hold the tail till over here. Price is trying to push towards the downside. Let's see if we get the full target or not. So the low is 456. Let's put the exact target. Let's put 46. So I put up the exact target so that if the price touches the target, we'll be getting the full target. Price has already taken out this liquidity. You can do the break even, guys. If you want to do the break even, you can do the break even over here. The price has taken out this major liquidity over here. Now it can also happen that the price tries to move towards the upside and take out all the stop losses. My performer says that I want to get the target or the stop loss in this trade. I don't want to do any break even, but yes, if you are interested, you can do the break even over here. I want to get the full target. If it happens, then that's good for me. Otherwise, we'll wait because I believe that there's a good liquidity on the downside as well. Let's see. It's around 90%. Price has not taken out the major liquidity, which is over here. 90% has already been done. The price can take upside or downside again. So I'm just putting it towards the downside. Because yes, I think in the London session, one of our trades did that. It didn't give us a target and then move towards the upside. So that can also happen. And that's why I'm telling you, if you want to get the targets, target out. So full target done, guys, $25. As you can see, the price went down after a so long wait. We are able to get 4.25 R. Let's look at the close trades. Everybody is sharing their profits. Good, good, good. Everyone good. Who all made the profit outs? Who let the profits out? Turn. So we had made 25 in this 4.25 RR. 4.25 RR. Let's put up over here. This was a 4.25 RR in which we made, I think, $25 in this. So we are up 4%. Now let's see how the price behaves if we get a buy entry and we can target towards the upside. Let's see if we get any buy entry from here, if the price wants to move towards the downside again. So we'll be planning our buy trade from here, putting the stop loss over here and targeting the upside majority of level over here. So there will be a small risk reward as a candle that made over here was very big. So that's why we have to wait. It's 287,39174. So let's put up the stop loss somewhere over here. Let's put up $10. So 0.01 will cost us $10 because the candle is very, very huge. So sometimes this one might also happen because the candle is huge. I have to be very sure about my stop losses or targets. The target will be 1.44. Let's see if the price confirms this bullish order block or not. Okay, so bullish order block is confirmed. I have punched the order. Guys. I think okay, yeah. So it is executed now. So next order is being executed. This is the third trade. If we lose, we have to lose 2% in this trade because the candle size is huge. Okay, so because the candle size is huge, I have to take care of it. And I cannot do anything because I'm an objective trader. So sometimes that also happens that the stop loss size is bigger than expected because the candle size is 89 pips. So I've taken just 0.01 and you can see the stop loss is for $9.14. If the price moves up, we will be getting $12 at least. This is 4407. This is 759. So we'll be putting it's 6.759. So let's put up the target. We have already made 1:4.25 R. Let's see if we get the third target or not, or if there will be a stop loss, if the price can go still down and take out the stop losses as well. Okay, because this was a good manipulation. This was a good candle towards the one-sided. Let's see how the price behaves. High probability says that after manipulating downside, the price should go up, and low probability says that it should continue towards the downside. The price is moving down. So many people are saying target achieve of more than 4% and they're stopping the trading. Very good. So if you have think that you can have achieved your, I think session goal that you want to earn just 4% or 2%, you're most welcome to exit now. You don't have to put all the trades. My type of trading is I take 5 trades at least, and then accordingly I decide. So price is moving towards a stop loss. We'll be losing a big, it was a big candle, and that is why we are going to lose a little bit more than expected. That's okay. So sometimes it will give you more. That this stop loss was $6 and we got 25, but we should have got only $20. And there are chances that it might go upside as well. Okay. It's all about holding the trade. The price is actually testing our stop loss area. It's still not confirmed that the stop loss is there. Price might try to push towards the upside again. So this is a major external liquidity. If the price goes down, then we'll be selling again. Price is 90% of the stop loss area. This is the third trade of the 5 trades. First trade was stop loss. Second trade was profitable for 4.25 RR. And the third trade is risk reward of 1.44. Lower the risk reward, higher the probability of winning. Higher the risk reward, lower the probability of winning. Let's see. I think it hit the stop loss, guys, 9.75. So let's put up over here. In our journal, we will put there's a engulfing candle and there is a -1 in which we lost around -9.75. So we are $11.3 positive till now. Okay, so this was the third trade. And now there's a high probability that the price might travel towards the downside again, towards the major liquidity downside. In both the cases, now we will be planning for the selling trade itself. So let's look at where's the liquidity now. Since internally the price changes character towards the downside. So what happened over here is internally, if you look, the price started creating a series of lower highs and lower lows. So now what are we expecting? The price create a deeper pullback and then go towards the downside. So even in this consolidation, we were managed to take profits for today. We are still up. I bet 2.25%. We are still up. This is a 4.25 trade, -1. We are still positive by 2.25% today. And 2 trades are pending. So let's see how this behaves. I put up the link of the Forex broker account. If you want to use the same broker as me, then you can join in and you can use the same link to open up your broker account. There's a risk calculator over here within inbuilt, and also you will see zero spread over here. That's why I love this account. So price is still pushing down only. It's not giving any retracement. If the price gives any retracement, only then we are looking for selling. So look at this, price is plumbing downside. And if we get any internal liquidity from here, only then we'll be able to sell towards the downside. So let's see, the price is trying to move towards the upside. If it takes out the internal liquidity, then only we'll be looking for selling again. So that's what I told you. If the price wants to go towards the downside more and wants to take out this external liquidity, we are expecting the price to first take a deeper pullback. Since the price created a lower low, something like this, we need the price to take a deeper pullback and only then go towards the downside. Okay, so price wigged out the previous liquidity. Now let's see if we get any entry. So the target will remain over here. So more the deeper the pullback, the better will be the ratio for the downside. Since we are expecting that the price should go towards the downside, and if the price is going up, that is actually good for us because we'll be getting much more better RR. Somebody is saying that triple R में तो junior NTR था. So it's on the Zoom chat, guys, not on the comment section. I'll be opening Zoom links very soon as well. Those who want to join the Zoom of the latency issue, because many traders are trading with us and they're getting some latency issues. And that's why I'm telling you, those who want to join the Zoom calls, I'll make some arrangement for you guys. Okay, so price moved up. Let's plan the entry from here. That's 748. Target will remain over here. It is again a good risk reward trade. Let's see if we get this trade or not, or if the price moves towards the upside again. So that's also expected if the price starts hitting green candle again. And we give a little bit space to the stop loss size. So price didn't confirm the entry. Let's see if we can any bearish order block from here. Okay, I've confirmed the entry since the price created the bearish order block. Let's see if we get this trade or not. This will be our fourth trade for today. If the price goes down, then we'll be looking again for the setting itself. This is 793. So order is punched. Let's see if the order gets executed or the price takes out the external equity before giving us the entry. So price plunged towards the downside before giving us the entry. And we have to wait now because the entry is still closing. So once this candle is closed, only then we can remove the entry. So price has taken out the external liquidity towards the downside. Good risk reward must have been there. So if we would have continued this major entry over here, I think let's close the order first. So we have closed and cancelled the order, and this becomes a new liquidity in the market. If the price crosses above this level, only then we are looking for selling. So now what is happening over here? Price manipulated the upside prices. We made some good profits from these levels, and then finally price broke down towards downside. The one manipulation trade was taken towards the upside, because if this was a manipulation, price would have gone towards upside, taken all this liquidity from the above, but that didn't happen. Okay. So now what are we expecting is, since the price momentum did something like this, we are expecting the price to create a lower high, and only then we're looking for lower lows. So after taking out the major liquidity, as soon as you can see that the price didn't give us the entry, we tried the trade from here, but it didn't give it the entry. So now let's see how the price will behave. Price created another liquidity level over here. Let's see what happens. Let's look at the previous day's liquidity. I think this is the previous day low. Yeah, no, somewhere over here. Yeah, so this is the previous day low now. This is not previous day low. So if the price takes out any internal liquidity upside, then we will be targeting this major level. This is the previous day low, guys. I'll mark this thing for you over the right. So this major marking is the previous day low. So this is a new feature over here. I just got to know it. This is nice. Let me mark these as well. Let's see if the price is any other entry or directly goes towards the previous day low. If that happens, then we are looking for a small buy rather than selling. Price is about to take previous day low only. So as you can see, guys, price has taken out the previous day low. So we tried selling from here. However, it was not possible. And the price went down and took out the previous day low itself. It was a panic momentum. We started selling from these levels to which we have accumulated around 4.25 hour. There are two still trades pending in the market. And let's see if we get any next entry in the market. So we are expecting a deeper retracement now. Once the deeper retracement happens, only then I will be able to understand that yes, I'll be taking another sell entry. So as I told you, the price is in a downside momentum like this, right? So we need a deeper pullback, only then we're looking for selling in the markets. So price has gathered internal liquidity over here. There's a small consolidation going on. And that's why I'm assuming this is a small liquidity that the price is created. And post that, since the price tapped onto this will be the new breaker structure. And we can be looking for selling opportunity. Let's see if we can get a small sell, and the target would be here. That's why we always like to have a deeper pullback. This is 422. And see if we get any deeper pullback. Price is moving up, which is good for us because we needed this deeper pullback. Higher the pullback, better will be the targets for the downside because we are taking a continuation trade, and that is why we are doing the same. Let's see how much are our risk reward we are able to take in this trade. This will be the fourth trade that we are looking for. Let's see. This is a continuation trade after a deeper retracement towards the upside. We are looking for a continuation trade, and we are going to target this external liquidity. And post that, we will be looking for buying again. Okay, I punched the order. We have punched the order, guys. This is the fourth order we have punched. If the price takes out the external liquidity, we are not looking for selling then. We are waiting for the price to punch the limit order upside, execute the limit order upside, and only then we are looking for selling itself. If the price breaks this major level on the downside, then we will be looking for buying and not for selling. So let's wait and watch what happens in this trade. This is the fourth trade for today. Let's see if the price runs or give us their good entry. We are already three trades done in which we have accumulated 2.25% till now. In the London session, we made around 10% today in the morning. So we have punched our fourth order. Let's see how it behaves. Price is flourishing downside, has not given us any entry. If it moves up, only then we'll be getting a good entry towards the downside. We have placed the limit orders in front of you. However, the price vanished towards the downside, plunged towards the downside, and it's about to take the external liquidity. If it takes the external liquidity, then this order will also be cancelled. Since the price is panicking towards the downside, we will be taking a buy trade rather than the sell trade. Price is still not taken the external liquidity, guys. Still pending. Once the price externally taken the external liquidity, only then we will remove the trade. Too much high volatility today. Yes, there is too much high volatility. As you can see, the orders are not getting punched. They're still lying here and there. Thinking of placing market orders. I don't think you should do that. That's not good because market orders will have slippages which may or may get against you. So that's why I put the limit order strategy. No doubt in the future, if the market order is required, if the market stays like this, then we'll be shifting to the market order strategy. However, do remember this: when the market orders are there, there's a high probability of not of getting the adverse slippages because it's highly positive because the candle data that you get to show over here has a very late feed, because of which the slippages might be there. So price is not taken out the external liquidity. Once the external liquidity is getting taken out, only then we can cancel this order. If the price moves up and gives us the entry, there's a high probability price can do that, and then will give us the target. So let's see how it behaves. Once the price takes out the external liquidity, only then remove the entry. Till that time, stay with the entry. Price is very near to the target. Once the external liquidity is taken out, then only cancel the previous order. High probability is that the price can go up and take execute our order and then go towards the downside. Price about to take external liquidity. Once the external liquidity is taken out, only then we are looking for buying orders. Okay, so price has taken out the external liquidity, guys. Wait for the candle to close and then close the order. And now we'll be looking for a buying structure. So now let's cancel the entry. And we will be looking for buying now, not for selling. Price is already taken out the external liquidity downside. and minimum target will be over here. Let's see if we can get any buy entry. This is 127. 020. Price is plunging towards the downside. So this was a panic momentum because we have been trying to catch the sell entry from the last two orders, but we haven't got so. So if we get the buy entry, we'll be targeting to this level. Let's see if we get any buy order block. Price is close. I punched the entry. Let's see if we get it, or there is another panic towards the upside. Price are not respecting our limit orders today, so that can also happen. Or if the price doesn't go towards the downside, mostly goes towards the downside, then we will be having a stop loss. Let's see if our order gets executed or not. Okay, order is executed, guys. This is the fourth order for today. I think we have already punched three orders. First was stop loss, second was target, and third was stop loss. So let's put up the target. The high of the target is 674. Low probability says that the price will try to move towards the downside again, and high probability says that it will go up. That's why I've taken this order, because there was a lot of panic momentum happening and there's a lot of pending liquidity on the upside. If you look, this is the major trend line that the price is being creating. Okay, this is the major trend line that the price is creating. So we are expecting that from this support, the price should do what? The price should take out this major trend line over here, and that is our expectation. So let's see if that happens or not. Or if the price further goes down. If the price further goes down, then there is a huge panic going on. You can have nothing to do about it. Price is plunging downside again, panicking downside. Let's see. Stop loss, one more. That's minus 5.10. Let's look at the closed orders today. 25 9 minus 9.75 minus 5.04. So we are still positive because we got the first trade very positive. That's why we are still positive, guys. So now we're waiting since the price is plunging towards the downside. Let's wait for a good buy entry again. I mean selling entry again. If the price takes out the internal liquidity and then gives us a selling, only then we are looking for selling itself. So four trades today. First was negative, second was very positive, third was negative, fourth was negative. We are still positive plus 1.25 R. And this will be the last trade for today. Let's see how it goes. And then accordingly, we will close the trade. We tried selling 2 times from this level and this level as well. Both of the times our entry was rejected. And that is why the panic started. So let's see how it behaves now. So price now started creating an internal liquidity at these levels. Let's see. Once the price starts consolidating at any support or resistance level, that's where and when I get aware of. And accordingly, we are looking, if the price takes out the internal liquidity, then we are looking for selling again. So price has taken out the internal liquidity now. Let's see if it gives us another breakout structure. We'll be selling for 1:1. I would have expected a deeper pullback, but there's a high probability that the price might start bouncing back towards upside. If the price takes out the external liquidity, then we are not selling. Price is consolidating. And because the market is panicking, that's why I'm taking a panic trade towards the downside. This will be the last trade for today. Let's see if we can grab some pips. So if the price takes out the external liquidity, we are not selling. Price has moved up. The deeper the pullback towards the upside, higher the probability of a winning. Price is shoveling upside. Let's see. How will it behave? It's directly forcing itself upside now. That's good actually, because higher the deeper the pullback, then we will get more risk reward actually. Okay, price is plunging down again. Okay, so I punched the order. We have executed the order, guys, a little towards the upside. And the target will be on the down, which is over here exactly. Let's see how the price behaves. Small risk reward, higher the probability of winning. This is 148, no, 506. So that's our target. So either price will give us a stop loss. This is the fifth trade that we are into. High probability says that it should go down, all the consolidation, and low probability says it should go up. Let's see how the price behaves. It might go up as well, guys. That's why we are taking a very small stop loss. Today, we are still in a winning position. We have made 10% in the London session. And even if this trade gets out, we are still will be out with 0.25%. The first trade was loss. Second trade was profit of 4.25%. Third trade loss, fourth trade loss, and the fifth trade is going on. Let's see. I think the stop is about to hit. So fifth trade also stop loss hit. So let's put it up over here. So that's also happened sometimes. That's okay. We are out at break even today, -1, -7. So exactly, you can see my total earnings are $0 for today because in London session itself, we made good dollars. So if you look at the London session, the first trade was stop loss, second trade was profit, third trade was profit, fourth trade was small stop loss, fifth trade was highly positive. In the New York session today, we can see, sorry, this was not London. London was this one. Sorry. Yeah. First trade 21, second trade 2 RR, third trade stop loss, fourth trade profit, fifth trade profit. Now in the New York session, first trade was stop loss, second trade was highly profitable, and 3 small stop losses again. Okay, so that's how we are managing our trading profits and losses on an everyday basis. So this was a New York session. We're closing the trade day on the break even. So let's meet you tomorrow in the London session. I hope you will be doing good. And also remember that tomorrow London session, the news is coming around for the GBP CPI is going to be released in the market at 11:30 a.m. We will be coming live at 1:30 a.m. So accordingly, you can adjust your timeline. Do subscribe to the channel, the Trading Mindset Mentor. We are live trading in the gold and in London and New York session both. Okay, guys. So see you in the next session. And till then, hasta la vista.